Today we're joined by Jenny NEWMARCH, Head of Private Equity at Aware Super. Jenny, why don't you introduce yourself and tell us a bit about the programme?
Sure. So I'm the Head of Private Equity at Aware Super. We are Australia's third largest pension fund supporting members. So our members are typically public sector workers, teachers, nurses, police, etc. We have around 1 million members. We've got around 170 billion Australian dollars under management, of which around 11 billion is allocated to private equity, which is the portfolio that me and my team manage.
And kind of how does private equity, what's the role of it in your portfolio?
Yeah, so the role of private equity for us is really to be an alpha seeker relative to listed equity markets. So that's what we see as our cost of capital. And we expect to outperform listed equities by a fairly healthy margin over the long term, really to reflect the illiquidity and also the high cost of access of private equity. So that's the most important role. I would say increasingly private equity plays a really important diversification role in the portfolio, as we're seeing a much more concentrated global listed equity market actually getting exposure to broader GDP, broader sources of growth across the global economy. Private equity is becoming much more representative of that over time.
And kind of, looking forward, where do you see the most attractive opportunities?
Yeah, so I think at the moment, we're really trying to double down on the mid-market to lower mid-market segments across largely developed economies. We tend to focus our investments in the US, Europe, and in our home market of Australia. We think the thesis for mid-market investing has got increasingly stronger over recent years as we've seen record fundraising at the large end of town, really increasing dry powder at the large end of town, but not to the same extent in the mid-market. So that exit optionality in the mid-market has become really strong, and that's something that we're really focused on.
And I suppose finally, kind of in the last couple of years, lots been discussed about innovation, now financing, things like this. How do you see it from your position?
Yeah, it's a good question. There's been a lot of innovation in the industry over the last few years, I would say more than at any other point in my 20-year career in private equity. I think a level of innovation is healthy in the private equity market, but as always, there's a required catch-up of governance and oversight and tools to make sure that this innovation is used for the benefit of ultimately the investors. For example, I would say continuation funds, which we know are a very strong source of liquidity now for exits. There is a role to play. There are a lot of investors who want liquidity or that don't have the capital to keep supporting an asset that needs more capital to grow and can compound returns over time. So I think there's a really strong use case, but I think there's also been a lot of examples of, poor use of these tools, not for the right purposes, and not really bringing existing investors on the journey, not giving them true optionality around some of that activity. So increased transparency and governance, I think, is important. The same applies to NAV loans. We're seeing a big proliferation of NAV loans across the private equity market. In some use cases, that could be appropriate and healthy, but I don't think the LP community is necessarily caught up in being able to properly assess, govern and oversee those transactions. So I'm also on the board of ILPA, and we play quite an important role in educating the market and creating best practice around some of these innovations so that they can be seen as a win-win.
And I suppose finally, you've discussed, Aware Super's global presence. Is there a difference investing in Australia to Europe, or how do you see the opportunities and challenges in each market?
So we've recently set up our first offshore office. So we opened our London office just over 12 months ago, really to build out across our private markets capabilities an in-market presence so that we can be closer to the opportunity set, be a better strategic partner to the managers that we invest with. I think as we see the opportunities across different markets, I wouldn't say we're quite bottom-up focused. So it's not like in the US we're saying technology is really attractive, and in Europe, there's a different set of opportunities. I think in each market we're seeing some quite interesting opportunities. What we are really prioritizing in this environment, actually, rather than thinking geographically, is sector diversification. I think in the previous decade, as long as you were in technology and healthcare in your private equity portfolio in a long way, you would have had really strong absolute and relative performance to public markets and relative to the broader private equity market. I think in the last few years, and as we look out in a period of more uncertainty, more volatility, I think having diversification across your sectors is more important. We really pivoted a few years ago. We'd ended up with quite a healthy exposure to technology and healthcare through performance, and started to pivot that out and rebalance towards financial services, towards industrials. And in those sectors, we've seen really strong performance at times where we're seeing a bit of softness in technology and some structural risks in parts of the healthcare market. As we've seen interest rates increasing and risk increasing, some insurance business models are doing very well in that environment, so we've increased our exposure there. On the industrial side, businesses that are exposed to the energy transition or onshoring, renationalisation, those business models are doing well. So we think sector diversification is what's really key in the current market environment.
Perfect. Thanks a lot.